going to go into this view here, and I'm showing the raw chart with everything showing like at the bottom down here, so that we can see what I'm doing, because sometimes I'll put a comparison chart on. I want you to be able to see what it is I'm doing, how I'm doing it on TradingView. All right, so let's get on with this. So we have, first go to dollar index. All right, for some of you that have been with me for a while now, and have been with me since the beginning of the year, for the analysis on dollar index. Now, why am I even referring to that? Because it's a risk on, risk off barometer. It tells me if I'm likely to see continued upside going long in ES, or if I'm likely to see continued weakness in ES. And also it kind of contributes to, as you'll learn throughout this year, when I'm expecting consolidation, choppiness, things that might be conflicting in analysis, that means that I'm going to be looking for a lot lower degree of participation with risk. So in other words, if I'm not looking for a really clean one-sided run, then I'll trade very, very small intraday scalps, not try to capture the entire morning session run or the entire daily run or even a large portion of the weekly range. So I'm using this indicator, whether if I'm doing analysis with the Forex market, if I'm doing it with the bond market, if I'm doing it with equities and index futures. Okay, so all of my analysis, every bit of my analysis starts with this instrument here, because it helps me frame the logic of whether I should be a trader that's assuming risk. That means buying foreign currencies or buying stock. And if that's the case, then I'm assuming that it's risk on, and that would be a lower dollar. We were looking for a lower dollar at the beginning of the year. If you go back and look at the analysis videos that's on my YouTube channel and follow all the commentary on the tweets that I've posted on my Twitter account, I know there's a lot of it, but for those that have been here, this is old hat to you, but I'm counseling you not to take my word for it, because it's going to look like it's hindsight here. But everything I'm going to talk about here was talked about beforehand. So it's kind of like a benchmark where we were, where we are now, and where we're likely to go to next. So it kind of gives you like a full circle perspective on what I'm seeing or expecting. We were looking for lower prices, sell side liquidity. That was absolutely tagged. And then I said, if we went below that, we have an order block and we have a fair value gap in here. If you look at the range, and I promise I'll be very, very quick through this because I want to be in front of the charts live at 8:30. So half of this gap between this candle's high and this candle's low, that's a buy side imbalance, sell side inefficiency with an order block. So the order block is the down close candle. Why is that an order block? Because it has a fair value gap. Price has moved away from it. So if it comes back down and retrades back into this candle here, we're going to see some kind of what? Reaction. Does it mean it's the ultimate low and the dollar never sees any lower prices? No, it just means that it's going to be a strong draw on price when price is above it, as it was in the beginning of the year here. Moved lower, we use the fair value gap here as resistance. Okay, drops lower, digs into the sell side liquidity. Throughout this year, you're going to see that while many folks that come to my work, they're going to say, or you'll hear other people say, ICT complicates things. I'm not complicating. I'm just giving you a deep understanding about what it is available in terms of trading price action. Throughout this year, in live sessions and ongoing teachings, you're going to see that it's absolutely simple. It's very simple. We're only looking for one of two things. Is price going higher? Okay, if it's going higher, is it going to go above an old singular high, a swing high, or relative equal highs? because above highs is going to be buy side liquidity. Or is it going to go lower? If it's going to go lower, is it going to go down below a single swing low or below relative equal lows? So multiple lows or a singular low. Below those lows is sell side liquidity. Now, if I'm bullish and we have a imbalance, what's an imbalance? Something like this and like that. And I'm bearish, like I was in the beginning on dollar, it's going to draw to those levels. So I had 2 points of interest where I had the sell side here, and I said once we go below that, it could dig into this imbalance in this order block. Go back and watch the videos. It's in January's commentaries. Can't edit it, can't change it. What I want to take your attention to is the fact that we went right down to the middle point of that gap, which is consequent encroachment. Whenever there's an imbalance, whether it be buy side imbalance, sell side inefficiency, which is what this is here, it is a fair value gap by a category. Within that category is classified as a buy side imbalance, sell side inefficiency, or BISI, B-I-S-I. You'll see that used a lot in my charts. A lot of my students have their charts annotated like that as well. There's 3 levels. Okay, this is what I argue all the time when people just casually watch my content or my concepts. They'll say it's supply and demand. It has absolutely nothing to do with supply and demand. It's 3 specific price levels that I'm looking for. The actual high, which is going to be framed by this candle's low. So this gap or fair value gap is framed with this specific price level, the middle, which is consequent encroachment, and then the low. The low is the less likely price objective. So the 2 most primary levels when you're above it, trading down into it, it's going to be the high of that gap and as much as the midpoint. Look at the reaction there. You see that right there? That's undeniable. Okay. Also notice that I was framing shorts on S&P last week because we had traded down into this imbalance. I apologize. I got this new headset I'm using and it's sliding all around my head. The reaction here on dollar, this rally up into this imbalance here, and we don't know yet because really we haven't really opened up and moved around a lot so far tonight and into this morning's trading session. So I'm not going to have a whole lot of this is what's going to happen at 9:30. I have to wait to see what we do at 9:30. So, and you'll understand where and how I get that logic, where you'll be able to do it once we're not doing this anymore next year and you're doing it independently without me. When you're looking at your charts, you'll know what procedures to follow and what not to worry about and what things you need to be focusing on.